whether it is simply time to not be as negative as we've been, right? The Tom Lee point of view. Bad news is in. PPI, red hot, market goes up. Liz Ann Saunders, some encouragement in monthly inflation data she talks about. BTIG's Krinsky, we cite him a lot on this show. On the NYSE, more than 80% of volume was in advancing stocks for the first time since March 16th. Well, that occurrence did kick off a very strong rally. Typically, we need to see back-to-back 80% upside volume days to suggest a durable low is in place. Scott Minerd says he thinks stocks can go up. JP Morgan raises GDP. Is it time to be more positive?
Yeah, well, I think there's a lot of oscillation right now between people who were calling for, sort of the demise of the U.S. economy 2 weeks ago, and now all of these trends are starting to improve. And I think that's what it's about, Scott. If we think about not only from a technical perspective in the marketplace, but on the economic side, the trend needs to be your friend. And so I think we are starting to see, which I think is a positive, people looking at the trend rather than these top-level data points, because I think putting those top-level data points in a historical context, anything that you're talking about right now, you're talking about inversion, putting that into a historical context and saying, hey, this really doesn't fit in, the equation of what we've seen historically for inversions. I think that the other thing that we have to think about is, where is the softness in the consumer economy? Where is it going to come? And how is that going to impact some of the areas and the industries that we've been looking for to rebound in the back half of the year? Is it going to affect services or goods more? Is it going to affect increasing spend on things like healthcare? So I think what we're doing from a stock market perspective is that we're looking at, yes, it's going to be slower, but maybe not as bad as we thought. And with a backdrop of a slower economy, but still a positive economy, how do you want to be positioned? And are we seeing some not only economic trends improve, but perhaps a tailwind for factors such as quality and an emphasis on things like free cash flow that we haven't seen that afford us some opportunity into the back half of the year? So
sentiment, obviously, is bearish, to say the least. But Spoke today talks about the AAII, that's the American Association of Individual Investors. Their reading came in at just 15.8%. That's the least bullish individual investors have been since September of 1992. The CNBC All-America survey, only 28% of you thought stocks were a good place to be right now. That is the lowest reading in the 15-year history that we've been doing that. Steve Weiss probably voted in that because he's a market hater. Right, Weiss?
Yep. I hate the market, and I'm beginning to hate all the bulls because the bulls are keeping the market from bottoming. So, look.
Well, they say it bottomed already.
Facts are market. Well, maybe it did, but I'm betting it didn't. We haven't even had the first 50 basis point tightening. You went from a global, coordinated global, easy money policy, free money, not even easy, free money, to a global tightening. Europe's going to tighten. Asia's going to tighten eventually. We're tightening. So the market's not going to go up, period.
Well, the bond market's like we had the other day. The bond market's done some of the Fed's work for it, Steve. We have had a 50 basis point tightening if you look at interest rates.
Undoubtedly. But we're going to have more of them. We're going to have more of them.
Yeah, the market knows that.
So many people get paid. So many people, the market knows it. Does the market know that earnings are going to be down, that margins are going to be much lower? No, because the analysts, the S&P earnings haven't come down meaningfully, less than 1%. So you can't tell me the market knows it when the estimates haven't come down. So who exactly knows it? Does Tom Lee know it? The Purple Bull? He's been great, but I think you've got issues here. So markets don't always go up. We overshot on multiple expansion to the upside because of free money. Doesn't it make sense that there's a possibility we can overshoot and stay down lower to the downside as earnings come in poor, as margins get hit? Of course it does. So you've got to stop being so bullish, everybody. They couch their bearishness and bullishness. So I disagree with you.
What do you mean bullish, everybody?
Yes, everybody.
What do you mean bullish, everybody? I just gave you the surveys. Everybody's bearish. Who's everybody?
Scott, it does. Scott, as I've said often in this show, it does no good to talk over people. Look, the AAII.
Why are you talking over me then?
Is useless.
See?
The AAII
you mess with the bull, you
has
get
been
the horn,
useless.
baby.
The II has been worthless for years. Who cares? Okay, it's the index funds. They drive it all, and you can say, yeah, it's retail investors going in there. But the facts are, I think we stay down here. I don't know that we go down another 20%, but I don't see a 20% rally. I don't see a 10% rally here. If we do, be a seller because it's coming back down.
Shepard Smith here. Thanks for watching CNBC on YouTube.